Good afternoon, everyone. I'm delighted to welcome you all to what promised to be a very interesting panel on special situations, a topic that we can actually talk about for hours and hours. But today we're just going to talk about the special situations investing landscape in emerging markets with well, kind of a particular focus on this region and how it compares to developed markets. As we only have a short time today, so I think let's get started without further ado. I'd like to start with you, Barkai. I would like to ask you, what are the range of opportunities of special situations in EM? So, or like in a broader sense, in the whole emerging markets, is it being driven by debt restructuring or direct lending or M&A? What kind of opportunities are you seeing that you think are interesting?
It's all of the above. And I think when we use the term emerging markets, it's really a huge umbrella term. There are different categories and types of countries that's classified under that bucket. You can have a country like South Korea or a lot of the GCC countries, for example, classified as emerging markets. But the reality is macroeconomic environment here is beyond the typical emerging market economy that you would see. You have situations like India, Indonesia, Brazil, where there are proper emerging markets in the sense that they are developing and with right policies, they can get to a place similar. You have a couple of basket cases like Turkey and Argentina. We never know what's going to happen, and it's in constant flux. And then you have the frontier markets, I would say, which are generally a bit more tricky. Where we find the most opportunities, and I think what's been most attractive for us is kind of the first category, where countries like South Korea, for example, are of the Asian tigers, and what we see in the GCC region, where the economic environment is quite robust, the legal infrastructure is more or less there. But despite that, there isn't as much sophistication, perhaps, in some of these alternative credit markets that you would see in the developed world. So you don't have as many funds, for example, investing in this region in the distressed debt or direct lending, especially.
That's the thing. That's why I've been in there, because I introduced each panel, which was the idea. I was like, I'm happy to do that. Then I'm moderating this, and I was like, ah.
That's not me.
Okay, let's see.
So
I'm gonna use.
So what we
I'm
will
just
find the
gonna
most
have-
opportunities, I would say, is in this first category where we can get comfortable that the economic environment and the system in general is quite robust. But we can find opportunities at very attractive pricing and very attractive returns, because reality is not a lot of people are spending time of these. Not a lot of people have presence in the Middle East, or in general, there's a perception that this is a difficult emerging market to invest in, which in reality, we've been investing in the region for more than 10 years. We know that it's not, and you can find very interesting opportunities here.
Yeah, thank you. And Nelly, how have you noticed the restructuring shifted in the recent years?
So, I mean, I don't know if my mic is working. Oh,
Yeah.
there it is now. Sorry. I mean, as Berkay was saying, the region, I think, has a bit of a perception that it's not as sophisticated as others, and that's why it could be a bit more challenging. But I think that's definitely been changing in recent years. The region is definitely becoming more sophisticated. The regulatory landscape is changing in a positive manner. For example, I think ADGM earlier this year came with a new regime for private credit funds, which did facilitate the entry of several that have now set up in ADGM. That's just one example of how regulators and the landscape is changing to help the restructuring framework in the region. Obviously, the Saudi bankruptcy law has record numbers of cases that are happening now there as well. And the UAE put out a new bankruptcy law last week. So the restructuring landscape in the region is definitely changing. It's evolving, I think, in a positive manner, and has been over the past several years. And I think, as investors are coming and basing themselves in Abu Dhabi and the broader region, it will continue to do so.
So I think we can just talk about, as it was mentioned in the previous panel, and also as you just mentioned, there are so many funds that are coming here now and setting up their own offices, well, especially in Abu Dhabi now. Maybe we can just talk about a bit more of the hedge fund involvement in special situations, and how do you see it? Is it getting bigger, and do you kind of see that it's just gonna even expand?
Sure. I mean, I would love to see more players coming to the region and actually investing in this asset class. The reality is, let's be honest, most of the firms that are opening up office here is mostly for investor relations kind of purpose, and not as many people are actually actively investing in this region. And the reality is, in our space, at least in the special situations credit, there are only maybe a dozen firms or so that invest actively in the region. They've done it historically, and they know what they are doing, and we would like to consider ourselves as one of them. And it's difficult for an outsider to come in and understand all the subtleties of dealing in this region. You can't apply a U.S., aggressive Chapter 11, litigate to death kind of mentality, for example, in the Middle East, where issues are resolved in a completely different manner, right? You cannot use the same tool in different jurisdictions. So I do expect that more and more funds will come here. There will be a short-term challenge in the sense that the opportunity set is growing in the developed world, and that takes us away from this region. But the reality is that's even better for us, right? Because we are here, we know the market, we know how to operate, and we can identify those opportunities and invest. Although I think in the midterm, if you talk to me about in, let's say, next 3 years, there will be no doubt a more robust, both secondary and primary special assessed credit market in this region. I think it's inevitable sophistication of the jurisdictions as we go along.
And Ellie, from a bit more of a financial advisory point of view, do you think that the involvement of the hedge funds in special situations, like how is it affecting the whole process? Is it just making it easier or harder? What do you think?
I mean, I think more and more specialist funds being involved in situations is certainly very helpful. Traditionally, this has been a bank-led market in all types of financing situations with no other real capital providers, traditionally. But that is quickly changing. We are seeing alternative financing situations which are coming in Saudi, in UAE, and across the broader region as well. And it certainly is helping the landscape evolve in a positive manner. They invest not only in debt, they invest in debt for equity situations. They can provide mezz financing. There's DIP financing. There's all sorts of structures that they can come in at that can be very helpful. And I think that's definitely changing the landscape in a positive manner. And it was referenced, I think, in the earlier panel that mid-market corporates are facing struggles for financing. That's where I guess special situation and alternative kind of investors can be very helpful to come into those situations, provide financing solutions that banks wouldn't, and come in across the capital structure as opposed to just doing it as a straight, loan for 5 years at a certain interest rate.
Which is, I think, a region needs desperately, to be honest, because for the last 15 years, the way to resolve stress situations by the bank side is just extended for another 5 years, And what you end up with a company that's servicing the interest perhaps when, LIBOR or SIBOR is 0%, but increasingly that's becoming more challenging. And also they are not deploying any capital into growth, into CapEx, into working capital. So it effectively becomes a zombie company that they can't do anything to grow, to prosper, to actually become more developed. You need to bring more alternative tools. You need to do a debt equity swap. You need to be able to provide new money, for example, in certain situations. And the reality is the banks, it's not their business to do that. Their business is very simple. You just lend to help the companies and collect the interest. But also they have this fear that anything that's a bit more complicated than a regular debt is going to take more management time. It's going to take additional capital requirements. And they're shying away from doing that, which means that the problems historically haven't been resolved. I mean, Saudi is a good example, right? So there are so many situations in Saudi where a debt restructuring, a proper debt restructuring has never been done. Everything has been amended and extended. And now with the FRP regime that's implemented, we are seeing more and more of these companies trying to actually resolve, trying to cut back the debt and get a fresh start, which should be the point of this kind of restructuring regime. You need to be able to get the company breathing room and ability to grow after the process.
Mm-hmm. So with these kind of involvements, we'll kind of just see a bit more innovative tools to be used rather than just keep the ball rolling kind of.
Inshallah. I mean, look, we've seen different cases across the region, right? We've seen deep facilities in the UAE. We've seen cram down on, for example, banks in Saudi Arabia quite regularly. We've seen debt equity swap in Bahrain. It's not only just UAE and Saudi. We are seeing that across the region, across many countries in the region. I would like to see more and more innovation brought to the table. And the reality is there's an element of trial and error at this stage, right? You don't know what's going to work until you start investing some time and look at the structures and see what can be applicable. But eventually we will get there. Eventually we are going to see more innovative solutions. And that's what the region needs more than anything else.
And I think the winners on the private credit side in terms of the investors that will kind of see those opportunities are the ones that base themselves in the region. I think it's very challenging to source deals, understand deals, and do a lot of the kind of hard yards of getting to the bottom of situations remotely. It does require a very local presence. You need to understand the local market. It is not the same as the Western world. Things don't happen the same way here, and everything is not necessarily what you see in many situations. So, yeah, I mean, I think those that base themselves here and do the work on the ground in the region will be the ones who get the fair share of the best opportunities.
No, which is exactly why we set up an ADGM as well. Because the reality is you need to be on the ground. There is an information asymmetry, right? And the best way to actually mitigate it is to, as I mentioned, be on the ground, talk to the company, talk to advisors, talk to everybody involved in it. And that's the only way you're going to fill in the gaps and actually get an accurate picture of what's happening, which gives you that comfort to invest in the situation with greater and greater size. If you do it out of London or New York, London maybe, but New York, it becomes a bit more challenging. And that's why I think as the region gets more and more sophisticated, and when we start talking about Middle Eastern alternative credit or special situations credit as a product, then there's going to be a boom of these kind of innovative solutions, and it's going to be incredibly resourceful, I think, for the companies and banks and the other stakeholders in the region. And hopefully we'll get there eventually. It's not going to happen tomorrow, but I think the future is bright and we're heading in that direction.
Now that you mentioned the West, so I think maybe we can just talk about a bit how this compares, the special situations in emerging markets compared to the developed markets. Are there any lessons to be learned? Are there anything that kind of just when you look at it in comparison that you would say it's better or worse, or I don't know, there's room for growth?
Well, again, the developed world is a very big umbrella as well, right? When people ask me about people that are not familiar in our sector, what is it like investing in distress in the Middle East? I always compare it to Italy. I think that's the closest comp in Europe, where historically it has been at least, where information asymmetry is there. The courts can be somewhat slow sometimes to make judgments and make decisions, and you have a variety of situations that might be caused before the underperformance or whatever reason, and the shareholders are generally very strong personalities that are sitting across the table from you as well. So you cannot apply UK placement tool, for example, in investing in the region. But in Italy, with similar kind of concepts, with similar kind of ideas, everything takes longer than you expect, and you can apply that kind of playbook here. But again, I think increasingly what we are seeing is there's a willingness in the region to accept and implement best practices in our field. When we talk about the bankruptcy law, when we talk about the examples we were talking about on deep financing, around the equity swaps, etc., eventually we should see a convergence of those themes between developed market investing and the regional investing. Again, it's not going to happen tomorrow, but I think in 3 years, 5 years time, we will see that the playbook will get similar, right? We will have increased sophistication here. Hopefully the sophistication will come on the corporate side, on the bank side, on the advisor side. I think we are already there. The advisory talent in the region is incredibly sophisticated, and gradually I think we converge into the two geographies.
Mm-hmm. What do you think, Ellie?
I mean, look, I second that, and I think at the end of the day, the region obviously has evolved, as we said, over the past couple of years. It will continue to do so, but the landscape, I think, will remain very localized in the sense that you still need to have people on the ground who understand the local market. There are groups of people that have been here for 15, 20 years that have done this work for that time, and I think there is a period where somebody who's coming to the region needs to understand how it works, and that takes a few years, I would say, to properly understand how things work. And so those that have been here and are here, I think will continue to have the advantage. But the experience from having done it in the West will, of course, be helpful as always.
Thank you both. I think this might be a good time to open the discussion up to the floor. I don't know if there's anyone who would like to ask a question to one of our panelists. No questions? Okay. Thank you so much for your time, both. Thanks a lot.